Good morning and welcome back to the Opportunistic Trader for October 29th, a Monday, couple of days before month end. They're trying to save the market at the end of the month, so we'll see how much they can bring it back. Overall, last week was a very, very, very good trading week. Hope it stays like that forever, but the computers can't let that happen, so we'll take it for as long as we could get it for. But overall, a nice week. Active markets were all over the place. I think we touched a little on the range on the S&P on Friday. Was we were trading on the low and literally traded the high 60 plus handles higher in less than an hour. To then proceed back down another 50 handles and trade back down to the 50 level. So overall, very active, very busy day. I think we had like 13 trades on Friday, which is more active than we've been in the chat at any point. I'm not expecting that today. Markets are up 27 handles, but they're really up about 35 handles with the premium in the S&P. And overall, markets are firm. It didn't look that way when I happened to wake up at 3 in the morning and I saw the S&P, turn back negative on the night, was trading near the lows and has rallied about $35 since then. A lot of that is probably coming out of Germany. The fact that Merkel is either A, resigning or serving her term but not going to seek re-election, which is kind of weird to me that the market would be so firm. It is oversold massively. That market is down 14% for the year coming into today. It's up about 2.5%, but she, was the reason why Germany was so strong, I think, for all of those years. So I don't know, maybe dead cat bounce, not really sure. Small muted reaction in the euro lower. Dollar higher. Dollar is slightly higher across the board. The British pound is still in that 128 to 132 range. These currencies are dead. They're not even worth turning on and looking at. They don't really move much at all. Looking at volatility today, with the market up 30 points basically on the S&P, volatility should be lower than where it is. This VIX is showing about a 23 vol. Interestingly enough, the OCC futures are only down 2%. So I'm expecting the market to probably either trade in here and sell off or, stay in this area. But it doesn't, my indicator that's worked for us over the last couple of weeks is not showing me that this is a real move. Now, obviously, it's a real move because we're up $30, but a real move meaning that it's going to extend from here or trade up from here. So that being said, markets are firm this morning across the board. Didn't look that way out of Asia. China, which we should probably take off the board, is down about 25% for the year, which is pretty unbelievable. And Hang Seng down about 18, and Japan closed down about 7 and rallied 1.5% when we rallied. So that's sort of the setup. Stocks are up across the board. Apple's up its regular $3 that it moves every day now. The largest cap stock in the world. Over the weekend, there was a deal between IBM and Red Hat. Somehow Gina Rametti wanted to pay a 70% premium for the company that she could have probably bought for a 10% premium. But IBM is getting hit again. It's the lowest level that I've seen it in a long time. I think it's trading in the 115 area, maybe a bit lower.
Analysts saw it as a reach and an overpriced desperation move. For what, I don't know, but
listen, they're paying $34 billion, and their company net worth right now is 100 or under 100. So you're telling me that Red Hat is worth a third of IBM? I mean, something doesn't seem right. So that being said, we'll keep an eye on, keep on an eye on that stock not doing well in the pre-open. That is not a Dow stock, nor is GE, which is shocking to me. Anytime a company does bad, they just take it out of the Dow.
GE's not a Dow stock. Well, I guess after, I guess it went down, so I guess they had to pull it out.
Right. So they only put. I'm surprised they don't have FANG as the Dow. They should just change the Dow to the FANG. I mean, I've never seen anything like it. It's like if you don't perform, you get kicked out, and they put in a stock performing. And then if that stock doesn't perform,
then people are surprised as the breadth of the market gets narrower and narrower. As we rally.
Well, listen, there's a lot of that's for another conversation that could probably take all day. But it's this passive index buying and continual buying that is just it's pretty shocking.
And it's brand marketing. I mean, I'm not disagreeing, but it's brand marketing. How do we keep the Dow name important? Well, let's make sure the stocks in it go up. CNBC won't talk about it if it's down. They'll delist the Dow if it goes down. We're gonna create a new index. Give me 5 stocks that go up and try and make an acronym out of it.
I just have, it's funny you bring that up. I have a point that's been sitting with me all weekend. And it's that everybody talking about a correction. The NASDAQ is in a correction. How is a market in a correction when it's up on the year? Okay, that might be a pullback. If a fund is up 30% for the year and loses 10 and is up 20, is that really that bad? Or can you say that a market that's up 30 that's now up 10 is in a bear market? Because it's up 10 on the year. I think it's
important to define correction, even though I don't know that there's a hardcore definition of it.
Yeah, they're using a hardcore.
You may see correction as different than other people.
But they're using their hard number is 10% from the all-time high. That cannot be a correction.
I know the definition of a recession and definition of a bear market in terms of percentages, but I didn't know that there was actually a hard number for correction.
Yeah, 10% is a correction.
Because I would just use the verb
is a bear market.
Stocks are correcting. I won't officially call it a correction because I didn't know that there actually was one.
Yeah, correction is 10%. So the NASDAQ is down 11 or 12. The S&P got down about 10 and now is down less, obviously.
But you don't call it a correction unless, in your mind, a correction also necessitates it being in negative territory for the year.
I would say that a correction
we've got another month, Larry.
I know, but I would say no. But listen,
I'm making a joke.
I know, but if we go down another 10%, they're going to say that we're in a bear market, and the market's only 10% down on the year.
Yes,
and 20,
that is the problem.
20% from the high.
You're right. That's the problem. No, that's the problem. You're right. From correction, by their definitions, from correction to bear market is probably like a 0.5 percentage point.
Well, because we rallied off the low in February, 20%. If we go back down to that low, we're down about almost 20%. You'd say that is a net bear market. I mean, I don't even think we're close to a bear market.
No, we're not. That's my point. That's my point.
But
if we were to drop 20% from the February highs, you would say we're in the same range we've been in since February. And you'd be right. And you wouldn't call it a correction or a bear market.
I would say from the June highs, not from the February highs. If we drop from the February highs, we'd be down pretty good on the year. But I just don't understand this correction thing and this bear market, what they're using as a bear market. When I remember trading, a bear market is when the market was getting crushed. Not we're in a bear market, we're down 6% on the year. I mean, come on. So I think they're using that as an excuse. They're using it to get more people to buy. Markets are
correction implies it's temporary.
And markets are very tradable here, to be honest with you. They're very forgiving. Interestingly enough, I want to point out that the straddle is only $25-ish, which is much lower than we've seen. I mean, Friday's straddle at one point was like $35, and you got your head ripped off if you sold that thing. Because the market had a $60 whip up and then a $50 whip down. So you would have been whipped out of the ball game. Interesting, looking at Amazon, the way it traded on Friday, I wouldn't have expected, even with the market being a little bit strong, that it would be up. It's not up a lot. It's up 1.5%. But that stock's under heavy pressure.
Yeah, it got pummeled on Friday.
Tesla's good again. It's back to basically where he made his comments, which is shocking.
I think the SEC bought the dip. Sorry if you're listening. I'm just kidding, guys.
Maybe 420 is too cheap.
Well, I loved his comment over the weekend, or I think it was on Friday. He goes, "Yeah, that 20 million was well worth it." I mean, that's just a slap in the face to the SEC, who just gave up and said, "Give us 20 million." I mean, it's nothing to him.
I know, and yeah, I know. I'm waiting for the class action suits to use that for reference. I don't know. He's just, he's Teflon now until he's not.
That's like double murder at this. He can't ever. They settled. It's done. So that whole. It can't be tried.
Double,
can't be used anything.
Double
jeopardy.
Yeah.
Yeah. It's
but so.
Yeah, so that's sort of
what stocks are on your radar today, Larry? What about Amazon? To your comment.
Nah, I'm not really. I'm not really an Amazon trader. I like to trade Apple and Facebook. Facebook bounced $3. It's up 2%. Again, don't think the market's going to hold in here. I'm not as crazy bearish as I was over the last couple of weeks as far as what these clowns might, and I mean clowns, might pull into month end as far as, marking positions or trying to bring the market back or all of that.
Trying to save their jobs.
Yeah. It would be interesting if they actually sold them on the close, in the last couple of days. But right now, you gotta respect the market a little bit in the sense that it could bounce here. I'm not expecting much of a bounce. I would be a seller if the market came in about $10 here. That would lead me to believe that the market is a sale. Right now, the market is in no man's land. It's a good area to sell some premium. To maybe look at even selling that straddle. It is a little cheap, so I want to kind of stay away from it. But they want to buy the market for whatever reason this morning. And again, this may fail out of the gate. We might fail out of the gate here. They may, the market's up 25, but it's really up 32 or 31 because the cash went out, I think, at 58. So we're going to be up. We're going to be up a good number this morning, so gotta watch that. But again, for me, I felt over the last couple of weeks the market was no good. I still think it's very no good, but today you have to be a little bit respectful until the market comes off $10 to $15 here and gets back into that lower end of the band. If that happens, it's all bets are off, and I would become a lot more bearish. I'm not as bearish in these levels, but again, the straddle is probably a sale at $25 or $26. But again, you're gonna, a lot of these trades, like this is a great trade, but it also impedes on your trading for the day. So if you sell that thing and buy some wings around it, you're kind of not able to fluidly trade these moves. Where it benefits you is on a day like today where you don't have a 20 handle or 25 handle whip. So, maybe today look at options. Got to wait till after the opening to see. Across the board, oil again bounced a little off the lows of last week, which was in the 65 handle. It's in the 67 handle. Now, almost a 68 handle, but doesn't act well today for a day where the market is up 25 handles. So I saw natural gas was down back to its old self at $3. I guess they found the gas somewhere, but everybody gets giddy on that and then it fails. So that really didn't move too much. It got up to like 3.25. Bonds are interesting here, upper end of the recent range, maybe a little bit to do with equities and the fact that they may think that Powell will not go in December. I don't think that he's going to change his mind here. I think they're going to go. I don't think it's as big a deal as the market makes it seem, other than Mr. Trump. again, going back to volatility, not down too much, only down about 4% with a 30 handle move. So still hanging in the 23, 24 area, which is really high for this thing. And we've spotted this inversion between front month cash VIX and the back month futures. And the back month futures are significantly lower than the cash VIX, which is weird. They're giving the market downside no respect. They think that there's a bounce coming, which today there is a bounce. And they're not, that
buying short-term options is putting a Band-Aid on a bullet hole, and definitely, if you don't think we're going to make new lows, you don't want to spend a lot of money, and I think that's what makes it continue to make new lows. How's that?
Could be possible.
I mean, if I could just throw a couple things
protection,
on the downside, we might be indicators might be overstretched, and we're due for a bounce, but I don't think the downside. I don't think the low is in place until I see a close above the previous day's high. That's how I feel like it. I don't feel that a low is in place, although bounces will occur. But I don't think a low is in place for this move until we get a close above the previous day's high, and we haven't seen that. And today's rally, I think, in deference to Merkel, I think the market might have been discounting her retirement, and today the actual news would be like, sell the rumor, buy the news, although we didn't hear the rumor. Italian bonds, if you're looking for an excuse to buy stocks, Italian bonds have actually improved over the last 5 days, yield-wise, so maybe there's a little less pressure there. Who knows what they were talking about over the weekend? But I want to ask you something about the VIX, directly related to what you're talking about, not the backwardation aspect. Is it something to keep in the back of your head that on Fridays they tend to sell volatility off early, taking the theta out, and that perhaps today volatility is not so much lower because it was taken out on Friday?
Could be possible.
I'm
not really
just
sure.
Something to keep in the back of my head. But that said, I give that like a 10% chance. I think your MO of looking at the markets right now in this way, and this high correlation,
I just think
strong.
You have a short-term bounce here. The market may hold, it may not hold. If it doesn't, you're going to see a spiky VIX. VIX could trade. I don't think it'll trade 29 until we break that 2600.
Right,
and we're at 2700, so we've got a long way to go for that.
Where was it the first washout down here? It was Houston.
It was 29 at 2713, so we're lower, but we were significantly lower. We never took out that vol high, and now vol is just ticking lower and lower and lower. It's pretty interesting.
I think that's significant from people playing both sides of the market, swing traders. If the VIX does not rally as hard as it did last time, maybe it won't. But if we make new lows, I think the VIX will make new highs. Conversely, to Larry's point, if we rally, I don't think the short-dated VIX will back off as much as you would expect until October 31st. And the reason I say that is because anybody who's buying short-dated options is probably not selling them out, and they need the insurance until the end of the month. What I would be very interested in seeing is how the next, after October is over, how the spot future or the prompt future behaves when that convergence is over. I would be interested to see if the backwardation spreads. You know what I mean? Meaning the problem's not solved; they just kick the can down the road.
Yeah, I mean, I don't know. I don't know how to really look at that per se, but we'll keep an eye. I don't know why people would want to kick their protection at month end. I'm not under. I don't know why. I don't know why they need it on just just to mark the end of the month and then they get out of it. I mean, if that's the case, they're not going to be too protected. Moving forward.
Who knows? But I'm just saying, I don't really think a lot of fund managers, especially the ones under 30, under 40, are used to a bear market, as you said before, and certainly everything seems to be temporary. Buy the dip has been their mantra for the last 10 years. And so why go out and spend something on a long-term option when you think everything's going to be temporary?
Well,
They just bought this
I do
insurance
think,
policy.
it brings up a good point. I do think the environment is polluted with a bunch of people that have never seen a down tape. I mean, people are out there going, I have 8 years experience. Okay, 8 years sounds okay, whatever.
Right.
But 8 years, you haven't seen a down year. You haven't seen a down tape. You've never seen anything. So,
So it sounds ludicrous to buy 6-month options. You know what I mean?
What I'm saying is, all of a sudden, we're going to be 12 years into this and 15 years into this. And then the next thing you know, 80% of the marketplace will never see a down move. I mean, this has never been seen in like history of trading. I
know.
Or markets, that there hasn't been any type of down move in 10 years. So, you have a generation of traders that have never seen a down tape. So, that's something that's interesting to look at and think about, is that no one knows how to trade this because no one's ever traded it before. So, but volatility is coming in a little bit more as we tick higher. It's now down about 5%. I would have expected it to be lower and then, these machines to be back in selling vol. But maybe this just isn't enough on the upside, meaning like if the market fails in here, I mean, people are going to have to put up some numbers this month that are not good. Not good. So it's going to
maybe system algo traders have taken a beating and they've turned off because they're at their down and out number for the month.
Yeah, I don't know. Somehow they never lose, so I'm not banking on that. They always win. I've never seen anything like it. They literally always win. So that being said, I'm not counting on seeing very negative numbers there. I do think funds are getting wiped out, and I think the CTAs are. I mean, I don't even see where they could possibly be making money. They probably flipped to short S&Ps. Wouldn't surprise me. They just continually lose. I think the short-term trading funds could be doing well in this tape. I mean, I don't know how many there are or what the numbers look like, but this is a good tape to, be nimble, keep your powder dry, and be able to withstand.
I actually have a few stats on that, and this is the SG SocGen CTA information. Short-term traders are actually doing okay. That said, they're down 10 basis points. This is as of the 25th. This is, they have a number of funds that they track and CTAs that they track, but month to date, like you're saying, as of the 25th, the CTA index as a whole is down 3.17%, which year to date is 6.5%. The trend index is down about 5%, which is down 8% year to date. And I guess a trend indicator index is down 6.25% and down 15% year to date. And then the multi-alternative risk premia index is down 2%, down 5% year to date. So, across the board, that's more the CTA landscape, not so much individual equities, things like that. But yeah, I think they came into the month long equities, long crude, and both of those have had heavy reversals. And then the chop factor, they also had a fixed income position, and fixed income's reversed. All those combinations.
Yeah, I don't think it's too good out there, but overall, we've been trading well. This is a good market for us. We're going to continue to hopefully trade well into the end of the month. We're going to be active. Today is quiet pre-opening, but Friday looked that way as well. So, once they turn that spinning machine on, nobody knows what it could do. So, again, there's a flattener going on again in bonds versus 10s. Oil is lower now by 35 cents. Actually ticking lower as we speak. I'm not clear on that. I mean, it should be acting better. It's not. maybe there'll be sellers into month end. Positions are probably short in there. I saw some stuff on the COT data that looked like positions are being established to the short side and closed to the long side. So I'm expecting them maybe to whip back there. Individual equities don't see much. Twitter, off of decent earnings, ticked up from 28 to 33. Goldman is bouncing a little, but a lot of that is
the flattener in general can't be good for banks if you're just looking at it that way, right? I mean, as an industry.
Yeah, banks have gotten beaten up. Citi is just crushed. I mean, these stocks have gotten crushed. It's amazing though that they have money to buy them today. Like they're in there buying up 30 handles like there's no tomorrow. So can't get in the way of the machine. Machines want to own them. I'm going to state this, and I hope people are listening. I'm not as bearish as I have been over the last couple of weeks coming in on a Monday. I am thinking that I will become more bearish if we fail out of here 10 or 15 handles from here. I'm bearish overall and do think we're going to take out the lows coming into the end of the month. I do think the election will have a big impact on going forward. And again, I have my opinions on that. I think that they're going to lose one or if not both. I think it's going to be a tumultuous 2 years with this maniac. With Trump. Who knows what he can do or say? And, I know sore losers, and if he becomes a sore loser, it could get interesting. As far as today goes, don't see that much. Not strongly convicted. I'm definitely not bullish. The market could trade a little bit higher here. It's a good area to sell if they get up into the 2710, 2700 area. But what's interesting, really looking at it, you got to go back almost a week, and we were at like 20. I remember we were 2715, and we were on the air talking about whether or not we were going to take out that 2713 area that we made the low the last time. And if you look at it, we're only like 10 handles lower than that, even though we traded 100 handles lower. So the market has bounced. Volatility has stayed elevated, and we have to see today what the market gives us. But I'll leave it up to you. I don't know if you have any thoughts on the market or anything in particular. I see
Well,
gold.
can you give me? I have a couple individual stocks on my radar,
Sure.
but I want to check my pre-market indications. Can you tell me what your last is on Facebook?
Facebook last is 148.65, up $3.28 and 2.26%.
Okay, so that boat sailed. That's no good. However, all right. So basically, everything I had that said Friday's close was a buy with the stop at or new lows is over. All right. I like, although I don't have a particular trade, I like the banking stocks to lag in a rally today. Implications being that I would be looking to say buy like a NASDAQ and sell a banking index, or particularly a bank that's weak within the industry. And, Goldman has been choppy. They have been very weak recently. But I think the one I hate the most, or has done the worst, has been, I think, Wells Fargo. But they're bounced as well. You know what? On the individual stock side, I just have ranges to trade, and that can be fine. Apple, I think you can fade it under 219, but if it gets above 221, I'd stop myself out. I don't have.
It's trading at 219.54. So what does that mean? What do we do?
Okay. All right. When the market settled 216.04, it gave you a negation of a downside momentum. It did not say the market was going to go up, but it did say if it did go up, your first level to be leery of would be, actually the actual number is 218.66. you would expect it to go to 218.66. Above that, you could be comfortable that it should go to 221 and a quarter, but you would definitely put in a tight stop if you were long. So it's not really it's on a scale of 1 to 5, 5 being really strong trades, conviction trades.
Mhm.
This is a 1.
I get it,
I
but
just
am
see
I
bounces to
supposed to?
sell.
I understand, but am I shorted here? Do I want you? Am I getting short at this level and a stop at the higher level, or am I waiting on that?
Well, you're long. All right. If you're playing this, you're long above 218.44 with a stop at 218.44, or you're short below 218.44. You'd have to pick your bias, and I have no
What do you mean?
volatility signal
What do you
triggering
What do
right
you
now.
mean? I could either be long or short.
Well, it's a momentum indicator.
I know, but now the stock. So I'm just trying to get clear. So now the stock is 219.45.
Okay, so
So am
buy
I?
it with a 218.44 stop, and you would hold it for 2 hours.
So now we want to buy it.
You'd be buying it above that with a 218.44 stop for 2 hours. That's
Okay.
it. It's a rental.
Okay.
Or if you're looking for a reason to sell it, or you have a bias towards the downside, you could sell it here, looking for a regression to the mean, or you could assume that you'll get more momentum below
I want to do your
218.44.
system, whatever it says to do, or that's what
Well,
you would do.
right. Well, that's the thing. Right now, nothing's definitive on it.
Okay, so then
I
we'll leave
will
it
be
alone.
getting. Well, that's why I said on a scale of 1 to 5, it's a 1.
Okay.
But in
So then
2 days, if we're in this range in 2 days, I will get signals all over the place.
Bro, we're going to be in this range, out of this range, and back in this range 3 different times.
And that's
I'll just
fine.
let you know.
It's
This
where we
stock
settle
moves
on the time frame.
$3 every single day, every day. It's
No,
like
I understand that.
clockwork.
It's where it's a time system. You know, on an hourly basis, you'll get a trigger. On a 4-hourly
Okay.
basis, you won't get a trigger, and that changes your time frame. You know, we could
Okay.
have a $20 range and finish unchanged. That'll make the hourly, you know, give a high alert. We can have a
Alright.
$20 range on the daily and finish unchanged, and that could do nothing for the daily. It just shortens your time frame.
Okay.
That's basically it.
I get
The only
it.
thing I have that's actually good right now is gold, shockingly, for
What do
risk
you got?
reward. Well, I put out the levels, and you know these are levels that can be faded. This week, I think it's going to be an outside week for gold range wise, and you know on a scale of 1 to 5, I have a level 4 high conviction that if we get a settlement 4 hours on a 4-hour candle below 1229.11 or above 1236.35, those are levels to go with the flow, and your stop outs are the opposite side. You follow?
Hmm.
So that's a wide stop out. I use tighter stop outs, but that's your hard stop. So if we settle below, I'll give you right now, we're in the last hour of a 4-hour candle for my system, and we're not going to, it looks like. But if we settle below, actually I'm looking at, if we settle below in December, if we settle below 1231.60 or above 1239.06 in the next hour, I'm going to get a signal to sell for the next 4 hours. And if I'm wrong, it should reverse and traverse the range back to the other number. Volatility is expanding. That's all.
Okay. I just want to just touch again before we close up here because we're getting a little bit closer to the opening. You know, oil's the outlier today. It's now ticking down on the lows of the day. It's down about 47 cents. This is the stuff that makes it tough to really read. Like, so, you know, we threw oil out as an indicator. You know, we brought it in, we've thrown it out multiple times over the last bunch of years. But you know, sometimes it works well. But like right now, it's almost like a negative Q. So really, you know, on a relative strength, if oil gets a little stronger, the SPOO might get stronger. So, you know, I'm looking at oil and I'm saying, why is it down? But, you know, it rallied late last week off the lows. The market's coming into month end. Positions are short. They're probably trying to hold it in here. So that's the one false start that I'm seeing here. S&Ps are up 26, but again, I want to state that they're at a $7 discount. Actually, I'm sorry, it's a $10 discount. So really, we're up 35. I do think we're going to make this opening. We're utilizing European equities, or in this case, the DAX is up 2.5%. Our market is saying, oh, it's up 2.5%, but they're so underperforming us that it's pretty unbelievable. But I'm hoping for good trade today. I think we'll get it. Again, I'm not as bearish as I've been for today. I do think a trade back down 10 to 15 handles from here changes my opinion. I guess, for what we do, missing 10 handles is never any fun, but I would feel more comfortable at those levels. I'm not seeing anything on my board that looks overly interesting. The debt markets are quiet. Everything looks quiet other than the S&P. So, that's my thought in closing. We can touch the straddle again at 95, is trading at 24.5. So it hasn't really moved much. I do think we will have a 25 handle move. I mean, that's not saying much considering every day we're moving 50. So they want to sell that thing, but they've been getting hurt on it. And we'll come back to everybody slightly after the opening with positions. Right now, I'm sitting on my hands. I want to see a little bit of movement here. Mike, who do we have on tap today?
We've got, coming up after this, we're going to have Joe Vaclavic giving the overnight ag overview. Then 10 o'clock, we have Tony Greer coming on, and he's going to be talking about moving averages and technical analysis, kind of just some different setups where we are now. After this past few volatile weeks. So he's going to be coming on at 10 talking to those markets, and if you have questions for him, ask him then. And then at 1:30, we're going to have Adam Collins coming on talking about the latest CO2 report and looking ahead at November seasonality. So that'll be at 1:30, and then along the way, there are going to be some other people popping on.
Okay. All right. Well, I'm pretty good here as far as information that we've put out to you. Equities on a stronger opening, up 35 handles to fair. Stocks are pricing that in. Apple came in a little bit. It's only up, and now it's down to 218.90. So
buy it more and then sell it at 218.43. But that's the way I trade.
Yeah. Well,
but again, it's on a scale 1 to 5. It's a 1.
All right. Well, we'll leave that. That's a low conviction trade. Facebook looks interesting. I think Facebook has earnings on the 30th, which is tomorrow. Yeah. So tomorrow's Facebook. Somehow I don't know how they're going to save it. They got some serious issues. I would say, though, if they tank it, it may be a level to buy on an investable basis. But again, there's stocks out there that are, probably, better buys, but they don't go up. Like GE looks so good, and then it just took out a 52-week low at $11.20. The market cap on GE is under $100 billion. Okay. And today, the IBM market cap could potentially go under $100 billion. Who would have ever thought that? Who would have ever thought that a Facebook would be worth 5-7 times an IBM, or a GE? But that's the way the market's going. It likes, these high flyers, and that's really that's it from here. It's about 20 minutes to the opening. I'll give everybody a chance to get set up for the opening, and we'll be back to you slightly after the opening with our thoughts. Positions that we do will be in the chat all day. And Vince, I appreciate you joining me as always.
All right. Thank you.
All right.